In their last meeting, the US Fed decided to keep interest rates on hold. Their tone suggests that there were no more rate cuts going into the coming quarters unless economic data changes. Back here in Malaysia, Bank Negara has maintained their overnight policy rate, the OPR, and cut their statutory reserve requirements, SRR, to 3% from 3.5%. Now, what does this mean for investors? Well, imagine financial markets like a balloon. If central banks cut interest rates or lower reserve requirements, more money enters into markets. This causes the balloon to inflate. Prices go up. But inflation also goes up. So the US Fed decision could mean that stock prices have limited upside since no new money is coming into markets. However, the economy is still growing strong, backed by consumer spending. In Malaysia, more money are coming into the system via banks through loans for businesses and also consumers. The recent budget is also expansionary in nature, and that helps the middle and lower class consumers. So they might have a solid footing moving into 2020. However, what does this mean for your investments? Well, if you had gold, bonds, or some REITs, real estate, you might have seen their prices slightly go down within this past 2 weeks. This is because markets have turned into a more risk-on approach, especially with the recent development of the US-China trade negotiations. Money might be parked in stocks more now compared to before, so investors are more willing to take risk. To anticipate the future, a balanced portfolio of stocks, bonds, and real estate is still what I consider optimum for a lot of people who just wants to build that long-term wealth within the 5 to 10 year range. You know. So for bonds, you might want to look into quality bonds like A grades that have low possibility of default, but in case a recession comes, their prices will go up. As for stocks, you want strong, solid companies that have been paying dividends because those are less likely to be affected when the economy slows further. Of course, Bank Negara and also the US Fed is projecting that the economy remains strong moving into 2020, but anything can happen. Lastly, for real estates, net income is highly valued. And industrial real estates, however, for warehousing might suffer slightly due to a slowdown in business purchases because US China. Now there is a common theme around this, the suggestion, cash flow. We are at the tail end of this bull market and we don't know how long it might go. It might go for another year, might go another 2 years. But what investors should do is position themselves to make money no matter what happens in the markets. That's a level of confidence that investors should have, and that could help them ride ahead in this bumpy year. You see, when the road curves, you don't step on the gas. The economy is slowing down, but it's not stopping completely. So investors should not step on the gas at the moment. You should not be too aggressive into specific sectors because it can be quite a bumpy ride ahead. Thanks for watching.